Well, I mentioned earlier this week that you never want to short a dull market, and the markets tend to get really dull and lackluster in August. But the stock market, I got to tell you, has been anything but this month, right? The S&P has raced now to a record high 9 times this month alone. And today, the unique 1-2 punch was higher crude and much better than expected retail earnings. Now, energy, that sector is coming on, up 1.5% today. There are more signs that the central players there in this big oil war, that they're all ready to blink. On consumer discretionary names that soared, first all of them went up because Macy's and Kohl's absolutely blew away Wall Street consensus. Now, part of Macy's rally also included the announcement that they're closing 100 stores early next year. Management says workers will be placed in nearby stores, or if they are laid off, severance will be paid. Now, I've made the observation this week that we're seeing strength in luxury retailers and discount retailers at the same time, and that was the case again today. Now, it all dovetails with signs of increased consumer spending. Again, something I've been trying to point out for the last 3 or 4 months. There's no doubt that the increase in credit card spending and lower savings means that the trend cannot last much longer unless wages start to really increase very soon. But for now, the trend probably continues at least tomorrow, because after the bell, Nordstrom's had a huge beat. They beat by 12 cents, raised guidance, the stock is through the roof. Now, if you want to kind of trade this sort of thing, I would take a look at Tiffany's tomorrow. Technically, stock is on the cusp of a major breakout, and if it does, not a lot of resistance until 75 bucks. As for the broader market, keep an eye on oil. That's going to be key this week. And of course, don't forget, don't short a dull market.